Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journey, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to another episode of the What Matters podcast, where we explore the world of finance and beyond. I'm your host, Mike Mershazadeh.
And I'm Ashley Ward.
And today we have a special guest joining us, Cole Conkling, Managing Director at Inscription Capital, an RIA out of Houston, Texas, which has over $1.4 billion in assets under management.
Cole also serves as the partner and managing director of Quantor Capital, an asset manager in Houston. In addition, Cole shares his wealth of knowledge on investing through his book, Close the Gap and Get Your Share, and on his podcasts that he co-hosts, Now Know This. Welcome to the show, Cole.
Thank you, Ashley and Mike. Pleasure to be here.
We're excited to dive into some key topics today. Let's delve right into your journey and your origin story. So, Cole, you've had quite the journey from practicing commercial litigation for almost 9 years, before joining the investment industry in 2019, if I'm correct.
That's right. Yeah. I was a lawyer here in Houston, like you said, almost 10 years. And really, wasn't looking to make a change, but wasn't that happy practicing law, to be honest. And one of my best friends from college and lifelong friends named Juan Carlos Herrera had started an RIA in Houston called Quantor Capital. And after speaking with him, he basically said, why don't you come join me? And we can maybe get into the reasons why, and, it may have some relevance to the industry as a whole. But and so I took the Series 65 and joined in the spring of 2019. And then that company, Quantor, which was, like I said, an RIA, we later merged with Inscription in March of 2020, right before the world shut down. And then we kept Quantor as the asset manager separate, because we have two investment funds that we run through that. And so we kind of wear two hats. So I have, my Quantor hat as the asset manager, and then we're all advisors under Inscription Capital, which is a traditional RIA.
Very cool. So what inspired that transition from litigation to this? Was it just your friend and, you being in that industry and being unhappy and wanting to try something new? Or was there something, do you always have a knack for finance?
I would say, I got into law really to help people. And I loved law school. I loved learning about the law. I loved certain aspects of it. It's, I don't regret being a lawyer at all. I still keep my law license, and, the whole saying of like how to think like a lawyer, I think rings true. It's a great education. And I use those skills every day in my current job. But, the practice of law, like any industry, has changed. At least for litigators, I wasn't getting in the courtroom that much. It was a lot of kind of office work. And I just didn't really feel like I had connections with some of my, they were mainly businesses, corporations. And I just wasn't feeling like I was, making much of a difference there. And I was looking for a change, and really thought I was just going to maybe go to a different law firm and find a different way. And that's when my friend Juan Carlos said, look, I think you'd be great at this job. We'll help you out in the beginning, get your feet under you. Our other partner, Julio Cacho, is our CIO, and he's, PhD from Princeton, worked for a large family office in New York, and ended up moving to Houston. And so we all partnered together, and we always call Julio like our LeBron James, because he's got a great resume. He teaches at Rice University. And so, and I just love to learn, right? So it was a new challenge for me to learn a whole new subject. I would go to Rice and sit in the back of his class and just learn as much as I could. So I felt like we had a really great opportunity, right, to do something that I think would be more fulfilling for me personally, and then because now I get to help people. Every day I get to help individuals, and a big part of my job is teaching and sharing my knowledge and really trying to help people with some of their most important things is their life savings.
So let me ask you this. Obviously, shifting gears in your career, right? Was it your parents that always wanted you to be an attorney, or was that something you wanted for yourself?
My parents always wanted me to be a doctor, so I was pre-med first. Lawyer was plan B. I guess now I'm like plan C or D. But no, I mean they're like I said, I was pre-med in college, so I've kind of hit all the industries now, all the major professions, I guess.
All the impressive ones, that's for sure.
Try counting next or something. No, I'm not going to lie and say it was an easy transition. I have two kids, and luckily my wife was doing well in her career, and it kind of allowed me to kind of move backwards for a bit to move forward long term. So it was a family decision, and everybody was very supportive. But yeah, it's hard to leave a career when you're late 30s. I'm 40 now, so but I've had a lot of support.
So getting into this industry, you obviously had a couple people that had that were positive influences to opening this door for you. I can tell you that was the same for me too. In getting into this industry and having some positive influences that that had led you in there. Did you come in as a partner, or were you already an investor in the company? How'd that work out there?
So I was actually a client of the firm, a personal client, and yes, I came on as an owner, as a partner, a minority partner with incentives, and yeah, I mean a good split that would be better probably than a larger bank or an institution. So yeah, and I had a lot of support in that way. Giving me a salary when I first started that I'm now paying back through once I've got my feet under me. So yeah, I mean it's not I wouldn't say for people listening, it's, as you probably know, it's a hard industry to get going in. I mean, it's hard to get good clients and get good assets. And the way I wanted to do it was just to be authentic. I'm not like your typical. I'm not really a pushy salesperson. That's just not my nature. I'm not a cold caller. I'm not going to pressure salespeople. But I thought, once I learned what kind of Julio, who I mentioned, who's our CIO. Once I kind of learned and understood, because before I joined, I said, look, I really got to believe in the strategy. Like, I know I'm a client, but I never really understood it before. Like, you got to teach me what we're doing, because I got to believe in it. I'm not going to sell something I don't believe in. And so that was the learning phase where I basically took 3 months to, take the 65, but also to, like I said, go to Julio's classes at Rice and read all the books they would, give me. So I did a real deep dive, and I came away thinking, this is the right way to do it. This is serving clients. We can get in, if we want to get into philosophy, what we do later. But I really believe in what we're doing, and it's right for the clients. And I just thought, look, if I wrote down kind of who I know, my network, and I said, if I have the opportunity to share this with my network, I think I will get enough of a percentage to make a career out of this. If I can sit down with enough people and get them to understand, and then I think I should be able to do okay. So that's always kind of been my guiding light, has been, you know, I'm trying to basically tell clients the way to invest that's based on the science of investing, if you will, like what you're reading in an MBA course about investing, like that Julio's teaching at Rise. We're trying to translate that into real portfolios that work for real clients. So I know theory is not always the same as practice, but we take a very academic approach to investing.
So tell me a little bit more about joining in 2019. Obviously, you guys have impressively built the AUM up to, and we could get this wrong. We go off public information, which is we don't use RIA database anymore. What do we use now, actually?
A little shameless plug to Discovery Data.
Discovery Data. So we get dated information. It says that you guys had built your RIA AUM up to 1.4 billion. In 2019, do you mind me asking what the AUM was back then when you first joined?
Well, so just to be clear, so when we that AUM was, the firm that Julio, Juan, Carlos, and I were part of was smaller than that.
Yeah.
We merged with Inscription. So Inscription was founded, I think, in 2018 or 17 by three guys that were at UBS. And they had a large book there and started their own RIA, Inscription Capital. And so we basically merged our AUM with theirs. And that's where you get the number, the 1.4 number you've seen.
Now, has it been 1.4 since the merge, or what have you guys built it to there?
I think it's gone up a little bit. I mean, we had the big drop right in 22.
Yeah.
So the bonds, all got clobbered, and so those brought it down a little bit. But no, I mean, Inscription as a firm has been growing a lot. So I mean, we're definitely in a growth mode. We're trying to hire more people. And so they've really given us, it's a very entrepreneurial place, right? So, I mean, we all kind of have an overarching investment philosophy, but there's teams within Inscription. So, so my team would be like my two partners, and then other people have, different teams, and they may do things a little bit differently than us. I mean, we're not all the same. But yeah, we have some great clients, a good client base. And yeah, like I said, we're in growth mode. We're, trying to hire people right now. And so
have you guys mostly grown through organic growth?
Yeah. I mean, we've merged with a few other advisors. But yeah, we're not looking, we're looking to keep it in house, right? I mean, we're not looking to grow with, really private equity or anything like that. We're trying to grow organically.
Yeah, I like that. Yeah, I think Inscription taking on you guys would be considered inorganic growth. But I like that model. Do you guys get most of your clients just through word of mouth?
Word of mouth, mainly, yeah. I met with a prospect the other day, and he had joined another firm that basically got bought out, and they got just kind of shuffled around. And so I think that's important for a lot of clients, is that continuity and knowing that, like, we're going to be here, and we're not looking to sell the company or anything like that.
And how many total advisors do you guys have there now?
We probably have 7 or 8.
Oh, cool.
And then we've got a lot of credentials, and like JDs, CFAs. We have a great financial planning group, CPAs. So I mean, we try to be a one-stop shop for clients. We have kind of a division that does family office services. So we have a handful of clients that use us as a family office. We do outsourced, CIO, CFO type work for some families, and Yeah.
And looking ahead and 5 years down the road, where do you guys see Inscription at?
Well, hopefully we keep growing, right? And we're working on a new website right now. We're trying to get in a position to scale the business. And one thing I like is we do have flexibility, right? I mean, so we use like a robo advisor for smaller clients that allows us to take on people that may not be worth really prospecting hard economically, but if they come to us and they're like, hey, I'm a lot of young professionals that we think will be good long-term clients, but maybe don't have a big portfolio right now. We're set up to handle those through like a robo, and then we'll use traditional custodians for the if you have a larger portfolio. But so we have flexibility there, which is nice.
Yeah, that reminds me of some individuals I know in San Francisco. And they had grown from 400 million to 6 billion, but a couple of their clients, get this, they were they had invested about $300,000 into Uber back in, I think it was 08, 09 or something like that. And those two individuals combined became billionaires, right?
Wow.
And so their AUM went from basically 400 million to almost 2 billion overnight, just on those two individuals, right? Wow. So I like what you're saying, right? Who you invest in right now, or who you take on as clients right now, they might be small potatoes compared to what they're going to evolve to.
Yeah, and you never know. I mean, maybe they're small now, but then they have a friend who's not. If you treat them right and do well by them, or maybe they have family. Maybe they inherit money in the next week and they become a bigger client. So like, I mean, we rarely say no to people. On the basis of how much money they have to invest.
Really cool.
Very cool. Yeah. So we talked about this a bit before we started recording, but you're the co-author of a book, Close the Gap and Get Your Share, which covers investing. Can you tell us a little bit more about that book and how that came about?
Yeah. So, like I said, my two partners, Juan Carlos Herrera and Julio Cacho, are the co-authors on the book. And like I said, Julio has a very impressive resume, Princeton PhD, and we really wanted to promote him. And so, we hired an agent, and we said, let's try to get Julio to write a book. And the agent pitched the idea. And since Julio and Juan Carlos are Mexican Americans, the agent told us, look, there's a big need that we've seen, especially in the immigrant community, for a book about investing that speaks to them. Because there's a lot more challenges that immigrants face coming here than most people realize, right? The way that, for example, many Latin Americans think about money is different maybe than how we think about money if we grew up here in the U.S.
Right.
And that's for good reason, maybe, right? I mean, many people in Latin America don't trust banks as much. They don't trust the stock market because there's been a lot of corruption and there's been a lot of fraud, and so for good reason. And so they may come here and have that same mentality, and we wanted to try to speak to them and say, look, that may not serve you as well here, right? I mean, Americans, we're bombarded with the stock market every day. We've grown up thinking about investing, and it's just kind of second nature. You get a 401k when you get your first job, and we get to participate in the growth of the U.S. economy and the world economy. And so that was kind of the message. We wanted to speak to that community, but we wrote it really as a book that anybody that's a beginning investor, whether you're an immigrant or not, I think would find useful. So, Julio was the data guy. He's the guy with the ideas and the philosophy. And so we try to strike a balance in the book of being evidence-based, and here's the way we think you should invest, and here's the data, but also in a way that, it's easy to understand. And so, if you don't know what a bond is, like, we'll tell you what a bond is in the book. But then we also get into efficient markets and what that means, and behavioral biases and how that gets into play. And so, I think it's, we tried to make it, for anybody to read, that coming away, you should have a good baseline knowledge. Because we tell people that, one thing I told clients and prospects a lot is, look, like, the relationship is going to work best if, you don't have to know everything. I liken it to like driving a car. It's like, we're the mechanics. We're the experts that should know how the engine works, right? But you need to know that the car needs gas, and that you got to wear your seatbelt. You need to put air in the tires, because those basic things, that's kind of your responsibility when you drive the car. And if so you need to, I like clients that want to learn just a little bit, because it makes our job easier, and it makes the relationship, I wouldn't say it makes our job easier, it just makes the relationship, I think, more fruitful long term. If you understand the assets you're investing in and why they're up and why they're down, and so, the book is something that I think if people read it, they will have a great baseline knowledge of investing and kind of our view on investing.
So when it comes to, you said behavioral, I believe you said you had touched on the behavioral
right.
sequence of that, right? Let's take that back to 2022, right? So you're new in the industry. You came in 2019, a couple good years, right? Well, I should say 2019 you joined. 2020, COVID happens. The stock market takes this unbelievable dip. And then after that, it has this unbelievable explosion, right? And how did you manage the clients, during that, what was it, the spring of 2020? And then how did you manage them all of 2022, being new into the industry and having to deal with, all your clients' behaviors, and calling you up and saying, after their portfolio had already dropped 20% or 25%, saying, I want to cash out, or, how did you manage all those behaviors?
Yeah, I wouldn't say it was easy, and obviously every client's different. Some clients didn't call at all, and but the good thing about the COVID drop to me in high. Obviously it was very scary living through it, but as you know, it was so quick that a lot of people didn't even have time to really process it before the market really got back. Yeah. I had a few clients that just got lucky and ended up investing like right at the bottom. So they were very happy, but that was just pure luck. Yeah. And so, we and to answer your question, like in 22, our philosophy is we're passive, right? Like we think that clients should really focus on how to get market returns in the most cost efficient, cheapest way possible. And if you want more returns, there's things that we can do. That's why we have some funds that are basically like leveraged market portfolio funds. But we really, really preach like diversification, right? And so, when things are down, we try to show them the data. Like, look, you're not investing in single stocks, right? You're investing in the entire world market. Like, I know it's down now, but it's going to come back, right? Or else if it doesn't come back, we've got bigger problems.
Yeah.
The world's probably ending if the S&P 500 doesn't bounce back at some point. And so, like, I guess to answer your question, I personally didn't have that many people freaking out. But I think that's because we spend so much time on the front end trying to educate people and trying to set expectations, that when the inevitable drop comes, we can say, look, this is exactly what we said is going to happen. You just got to remain patient. Do you need the money right now? No. Well, then just sit tight, right? And explaining that, like, for most people, understand that in the stock market is easier. Explaining bonds, I felt is harder concept for people who don't understand them. So we had a lot of those conversations about certain bond funds that we own that have obviously taken a big beating, and explaining that, look, these will come back too, but here's when, and it may take a while. But no, I mean, that's why we try to be very deliberate on the front end about planning and like bucketing out your money. And so yeah, we've luckily had most clients stay put and not do anything crazy.
I like that. So when you take a look at everything there in a competitive landscape, how do you manage to differentiate your firm and create a unique value, I should say, proposition that will resonate with your clients, right?
Yeah, I mean, it kind of goes back to like when I got in the business of, like, I think if you're, I just wanted to always be frank and an open box to people, right? And so, and look, I mean, there's sometimes we may not be a good fit for clients, right? And we don't tell clients that they can never take risk, right? Like, you can never buy individual stocks, or be an active, quote unquote, active investor. We don't say that that's not going to work out for you, right? I mean, people outperform the market, and maybe you can too, but we just try to show them the data on that. And some clients may not be a good fit. Like, some people may want to put 100% of their portfolio into picking stocks or going all in on an active view. So we're probably not the right fit for those clients. But I mean, we think there's enough people out there that are interested in doing it our way. And not to say we don't have any. I mean, we have that investment fund that we run that, if you want higher risk, we say, just let's use leverage. For a qualified investor, we can use leverage to basically get more risk without having to lose diversification. Right. So instead of going 100% stocks to try to get more return, we're like, why don't you keep your asset allocation intact? And we can just add some leverage to that to get you, more return, but with more risk too. And so that's how we try to differentiate ourselves. I mean, there's not many shops, many firms in our landscape that have access to kind of our expertise in using leverage to get the higher returns. And we think we have a lot of really smart people, right? And we have, like I said, Julio, who teaches at Rice, and we've got CFAs and CFPs, and so we think we differentiate ourselves just as a great firm with a lot of knowledgeable people too.
Absolutely. So I'm curious, as a leader at your firm, what leadership lessons have you learned that you'd like to share with other professionals?
Yeah, I think it's a people business, and so you've got to, I think as a leader, you've got to set an example for younger people, right? We try to, I try to stress that in our business, details matter, right? It's kind of coming from the law world of, everything needs to be perfect, right? Like, right. You can't have typos on documents, because if you mess up a wire like that, right, that could be a really bad situation. And so we try to come from it as, look, everything we're going to put in front of a client needs to be perfect. There needs to be no typos. And I try to set that example. I think communication's a big piece of that. Like, communicating with, like I said, we're a very entrepreneurial firm. A lot of us work from home a lot. We have an office, but a lot of our day to day is virtual through Slack or Zoom calls, and just being having a good communication strategy. Like that everybody's on the same page. What are our expectations? I don't know if that was the.
No, I think I want to rewind a little bit. You kind of hit on something that I also wanted to ask you. Just how you have your background in law. Do you feel like that education and your experience there has really influenced and shaped your approach to investing and how you work with your clients?
Yeah, 100%. One thing you learn as a lawyer is, especially as a litigator, like I was, is you always want to, and it's a lot of writing, right? So you want to, whether you're writing or speaking to a client, you've got to be at their level, right? So like as a litigator, when you're writing a letter to opposing counsel, you're going to have one way of doing that, because that opposing counsel is a lawyer, they know a lot. So you don't have to explain certain things, that they know it. But when you're writing to a judge, that's a whole different ball game. You may now be trying to persuade, right, the judge to do something. When you're writing to your client, that's a completely different ball game, because the client usually is not a lawyer, and so you got to bring it down to a language they can understand. And so it's the same thing I deal with, every day in this industry is, every client's going to have differing levels of expertise or knowledge. Some have a lot, right? I mean, some, know a lot about investing. They may be in the private equity world, or they may have an MBA. And so those clients, you can really speak more at their level. And then there's certain clients that may not know what a bond is or what a stock is or how anything works. And so I always try to educate them and speak to them on their level, which I think having the law experience has helped me do that.
Mm-hmm. Yeah, I think that's a great point. How just the psychology, it really plays a role in both industries across. But so
yeah.
looking at, go ahead. Sorry.
I hear from a lot of clients get frustrated, I think, sometimes with our industry, that they feel like people are speaking above them and they're trying to always use big fancy words and the lingo to sound smart and impressive. And I get that. We want to be looked at as knowledgeable by our clients, but I think clients also want to be heard, and they want to feel like you understand them and what they're going through, and you've got to find a way to reach them somehow.
Absolutely. So looking ahead, what do you envision for the future of wealth management? Any trends, technologies that you believe will shape the future of the industry?
I mean, obviously AI, and we've already seen that with like robo advisors, and I think AI is going to play a bigger role, and that I think that could be for good and bad, right? But I look at that as just another tool that's hopefully going to make our jobs more productive in the future. Like maybe we can one advisor can handle more clients, especially if everything becomes more robo advisorized, I guess. Helping with rebalancing, helping with tax loss harvesting, like those things do free up our time to do other things. But I still, I think so. I think AI is going to play a huge role, and it already is. But I think clients are really looking for advisors is to be a trusted source, right? One thing I think about a lot is there's just so much out there now. There's so many funds to invest in. There's so much just information coming in every day. that part of, I think, a good advisor's job is to filter that and that information and present what the client needs to know, right? And say, look, there's 1,000 funds, we found the best one that fits you because it's, the best run, like that sort of stuff. So I think there's always going to be a role for advisors in that sense, right? As being the trust, like a coach, like someone to bounce ideas off of and to talk things through. Because I tell people all the time, like, you're not a spreadsheet, right? Like the spreadsheet would do this, but you're not that, right? Like, you're a human, you've got emotions, and I think humans need other humans to deal with that. I think that's what a good advisor can do, outside of all the expertise, right? I mean, I think there is a lot of there's art and science to figuring out someone's risk tolerance that I don't think a computer can do right now. And I'd be surprised if they could do it well in 10 years, right? I think that, figuring out those details of that, what's your asset allocation going to be? What's your risk tolerance, right? I mean, people don't know. I mean, I just don't think people know their risk tolerance until they're in it, right? You can say, I'm very risk tolerant, but then you don't know how you're going to feel when the market drops, right? And that's what I always tell clients. I'm like, you say you're going to be okay with a 50% drop, but if the stock market drops 50%, you know that the world is looking very bad. Like the world's on fire.
Right.
I mean, things are scary. You may think about how you felt in COVID, right? You thought, maybe things won't ever come back. Maybe I should sell everything right now and cut my losses. I mean, and so the future is uncertain. And I think having a human flesh and blood being that they can trust and it's on their side, has their best interest, I think is always going to be valuable.
I couldn't agree more.
I think the industry is going to change, just like every industry is going to be changed. But I think people are still going to want a good person on their side that they can trust through thick and thin. Right.
You can't go to your computer for emotional support when the world is ending,
Right. And just getting historical context to be like, look, we've had crashes before, right, and we'll get through this one too.
Absolutely. So Cole, can you share with us and our listeners what investments and sectors you're most excited about right now? What do you see as the next wave of wealth creation?
So like I said, we are kind of an evidence-based, kind of more academic shop. So like we think it's very hard to predict the future. And so we try to tell people like, look, you should own a little bit of everything, right? Like, Jack Bogle at Vanguard, the founder of Vanguard, said like, stop looking for the needle in the haystack, just own the haystack. So, I mean, to be frank, we don't, that's just not in my wheelhouse of saying, I think this industry is going to take off. Like, I honestly don't know. I have clients all the time recently, wanting AI, and AI is the hot button issue right now. But those clients own NVIDIA already. They own all those companies. If they're a public company and they're doing kind of our strategy, they own it, right? They don't own more than the market owns, but they own it. And so, and we just think that's the best approach. And there's ways, like we think factors are interesting, right? I wouldn't say that's a new thing, but factors may, I think there's a lot there. There's a lot of meat there. But at the end of the day, like sometimes I think any outperformance of factors may just be explained by being more risky. And if you think risk and return are linked, then maybe that explains it. But no, we own a little bit of everything. Like we own a little bit of Bitcoin, even if we don't necessarily like it, because that's kind of our mandate to clients is you're gonna own a little bit of everything. and you're going to have to get used to, kind of the ups and downs of diversification. You're not going to hit the home run every year. There's always going to be something that's doing better. And so we do tell clients, one thing we do help clients with on that front is we say, look, if you want to pick stocks or you want to be more active, let's sit down and decide how much, just like if you're going to go to the casino, and you should set aside how much you're going to gamble with. Make sure it's not too big. Make sure they understand the risk. And if they have a view, that they think, for example, I really think AI is going to go off this year, whatever it is, we will help clients implement that view that they have in the most cost-effective, efficient manner through the best vehicle. That's where we will advise clients. Look, you have a view. We will help you implement that view. We'll tell you what the risks are, and then we'll run with it. And we're not going to make any promises about what it's going to do, because we don't know. Right. And so that allows, honestly, most clients we tell that to, and they say, and they don't really want to do it. But there are many clients that do, and we just say, look, we'll help you do that. But for us, it's just not the game that we feel like we're equipped to play or want to play.
So, shifting into our final question here, there's been so much that's gone on in the last couple of years, with the 10-year treasury going from 0.5% all the way up to 5%, lots of money being lent out by the government. What's your economic outlook? What do you think is in store for the equity market, for the bond market? I'd love to hear your insights there.
Again, it's very hard to predict the future. I think, to me, the economy is surprisingly strong. I think everybody thought there was going to be a recession last year, and there was not. I think overall the economy seems to me is in good shape. The fact that inflation's coming down without hopefully a recession. They're always talking about the soft landing. It seems to me that we're almost there on that front. And so you asked what excited me. The most exciting thing for me this year would be if we had that soft landing and the Federal Reserve cuts interest rates, and we have bonds doing well and stocks doing well at the same time. That'd be a nice makeup for the last couple of years when bonds have done really poorly, right? Most of our clients do have a significant bond allocation, and a lot of them have had a big drawdown. And so, I think that just the way that the bond market works, I don't think I think there's a lot more room in that market for better returns. Just if you think about, assets reverting to the mean, and we had the worst 3-year stretch ever, I think, for bonds.
Yeah.
I don't know the future, but I would predict that, usually when things do really poorly for a while, they're poised to do pretty good for a while. So, I think the bond market is not a bad place to be if I was, going to make a prediction. The stock market did very well last year. It's off to a decent start this year. I feel like the stock market wants reasons to pull back, right? Everybody was thinking NVIDIA was going to have a horrible earnings call, and
oh yeah, I was watching that one yesterday.
Yeah. People always get worried the stock market's all-time highs, but I tell clients that's what markets do, is because of inflation. They're always close to all-time highs. That's nothing to be worried about. I wouldn't be surprised if stocks didn't do as well this year as they did last year, right? But at least we're in to me, a better position with interest rates higher now for the Fed to cut rates. If something does come up this year where we stumble economically, then I think the Fed's got a lot more room to help out than we did 2 or 3 years ago, right? So I think that's a positive. But yeah, who knows? I mean, we don't know what's going to happen. We could have some unknown like COVID, and then that just,
knock on wood,
everything goes out the window. Yeah. So, that's why we just say, like, look, let's just remain fully diversified, and then that way we can weather any storm.
Thank you.
Well, Cole, thank you so much for sharing your insights and your experiences with us and our listeners today. It's been an absolute pleasure having you on the podcast. Very refreshing, that's for sure.
Thank you, Ashley. Thank you, Mike. I enjoyed it.
Yeah. And where can everyone check out your guys' book again? Is it on Amazon? Is it
on Amazon? It's wherever books are sold. So it's called Close the Gap and Get Your Share. There's an audio book that yours truly narrated. Which was one of the hardest things I've ever had to do, 3 days in a studio. But yeah, if people prefer listening to it, they can hear my voice, and they can listen. They can take it in that way.
Wonderful. Well, thank you so much. And to all our listeners out there, thank you for tuning in to another episode of the What Matters podcast. Stay tuned for more inspiring conversations coming your way soon. Take care until next time.